Amit ji, how are you reading sentiment at this point of time? Are we sitting in Delhi or are you outside the country? Because it's baking hot in Delhi.
Firstly, thanks for having me on, Shell, and for your warm welcome as always. Right now, I'm in San Francisco, and I'm here for a few days setting up meetings with our investors because we do have an investor community in California who invest with us in India as well as globally. So I'm here for a few days, Shell, and it's still Thursday in San Francisco. So it's Thursday night, about 11 p.m. right now.
Are you looking at the markets at this point of time? Honestly, it's a party that's going on as far as the mid cap and the small cap segment is concerned. Yes, Nifty sideways to weak, but very, very strong phases in the mid cap and the small cap space. Is it here to stay?
I think so, Shell. I think while of course Nifty and some of the larger cap indices have underperformed because FIIs have been mostly net sellers in the last few months. And domestic money usually does not go that much into large caps, except of course for institutional money, which would essentially buy what FIIs are selling the most. So they sort of keep things on an even keel, and they because of their buying markets would large cap indices would not go below a certain level. But as far as the small caps and mid caps are concerned, I think there was a big turnaround sometime in April beginning, and they've been on a tear since then. My sense is that the rally in small cap and mid caps is here to stay, but it's just that it might get more selective from this point onwards because so far pretty much everything has gone up in the last 6 to 8 weeks. But it is quite likely that some of them may have gotten a little overstretched, which means that the rally could become a little more selective from this point onwards. But I'm pretty confident that the indices, even the small cap and mid cap indices, have further room to run, and hopefully they will do that in the next couple of months.
General feel, pulse that you are getting from the US geography about Indian markets?
Shell, from my conversations that I have had here, clearly they are not looking at Indian markets the way we would have wanted them to look. So while they do understand and appreciate that the valuations have corrected because we have from our peak in September 24 in dollar terms, we are down more than 25%, while earnings have been, I would not say they have been stunning, but they have been more or less, they have been on an even keel. And while we would have liked them to say that while the other markets have run up a lot and Indian market has underperformed, so maybe Indian market is a great value story at this point. But that's not how the conversations are panning out as of yet. And right now, the focus is on AI, the focus is on chips, and unfortunately, we in the listed space we do not have too many stocks, which are on the which piggyback on AI or which piggyback on chips. So because of that, I think they are not looking at Indian market very kindly at the moment. But my it might be a bit of wishful thinking on my part, but my sense is that at some point, uh, the the rally in the likes of Samsung, SK Hynix, and Microns, and ASMLs, and so on and so forth, they would start looking very, very expensive at some point. And my sense is that once crude oil prices come down and Middle East becomes a lot more normal for business than what it is right now, my sense is that India could be back in favor. But till that point, I think Indian indices will be somewhat sideways, and we are not expected to break out till the time there is absolute clarity that Middle East is going to be back in business. So till that time, I think stock specific and index specific, there could be action. But we should not expect Nifty to be at 25,500 or 26,000 till the time Hormuz opens up.
Mhm.
I'm an optimist on the Indian rupee at the moment. In fact, 97 was the level where we thought that one way or the other, one is, of course, that the Middle East logjam starts clearing up a little, and it has in the last few days somewhat. And secondly, we just thought that the FIIs are probably, they would get exhausted with the sheer quantum and the speed of selling which has happened in India from them over the last 2 to 3 months. So, considering all these factors, we thought that 97 is a great level to go long on INR. And my sense is that we have, of course, appreciated a little. It's not great even at this point of time, because since the war started, we are still down by about 6 odd percent. But my sense is that once things normalize geopolitically, we should be going somewhere close to 93. For me now, 93 is like what 81 used to be till a few years back when rupee was hovering in the range of 82 to 85. So 92 to 93 is pretty much the level that we should not expect dollar to break down below from those levels. But my sense is that another 3 to 4% appreciation from here is not unthinkable. In fact, I would say that the probability is better than 60 to 70% that we would dollar INR would trade below 93. But of course, I don't see it going below 92 because RBI at some point is going to step in, and the dollar reserves which they have lost over the last 3 to 4 months, there is a good chance that they would want to pick up some of those dollars and fill up the reserves which they have lost recently.